Finding ways to make owning a home work financially can be tough. But did you know owning a home comes with some great tax perks? Want to learn how to make the most of them? Stick around to discover how you can boost your wealth through smart home ownership. Elevate your finances with WealthWise Insider. Wisdom for wealth builders. Hi everyone, welcome back to our channel. Taxes are something you have to pay, and they can be really expensive. Many people think taxes are just a set amount, but there are ways to use the tax rules to make more money. If you plan well and think about how taxes will affect you in the future, you can save a lot of money. It's actually pretty easy to do, and you might be surprised at how much you can save. Home ownership has many benefits, but one that often gets overlooked is the great tax advantages it offers. Focusing on maximizing these benefits can really boost your wealth. Normally, when you sell a property, you have to pay taxes on the profit. However, there is an exception. If you sell your main home, you can avoid paying taxes on the first $250,000 of profit if you're single, or $500,000 if you're married. The catch is you need to have lived in the home for at least 2 years. Just think about how much money you could add to your wealth tax free every couple of years if you keep doing this. Buying a home that needs fixing up is a common way families use this tax strategy. But even buying a property below market value in a great location can help you make the most of it. A Roth IRA is a powerful tool for saving for retirement because it lets your investments grow without being taxed. Unlike a regular IRA, you put money into a Roth IRA that's already been taxed. So you don't get a tax deduction when you put money in. But when you take it out in retirement, you don't have to pay any extra taxes on it. This is especially great if you've saved up a lot and will have a big income in retirement. Both IRAs don't require you to take out a minimum amount of money each year during retirement. So you could put up to $6,000 a year into one. The earlier you start saving, the more money you'll have tax free when you retire. Owning property can be a smart investment because it can make you a lot of money and also give you some nice tax benefits. The government wants people to provide housing, so they offer special tax breaks to investors who buy rental properties. When you own a rental property, you can deduct some of the value of the building from your taxes every year. The government says buildings last about 27 and a half years, so you can divide the building's value by that number and deduct that amount from your taxes each year. For example, if your building is worth $500,000, you can deduct over $18,000 from your taxes each year. This is a great deal because buildings usually last longer than 27 and a half years, so you'll end up saving even more money. But remember, this deduction isn't free, and if you don't follow the rules, you might have to pay taxes later on. On top of that, owning rental property lets you deduct other expenses like taxes, insurance, management fees, landscaping, pest control, and maintenance costs from your taxes. Even the interest you pay on your mortgage can be deducted from your taxes. With all of these deductions, many rental property owners end up not paying any taxes on their rental income. But if you decide to sell your property without following the rules, you might have to pay some taxes on the profits. So while owning rental property can save you a lot on taxes, you still need to make sure you follow the rules. There aren't many ways to lower your taxes if you're an employee, but starting your own business opens up a lot of opportunities you wouldn't have otherwise. When you work for someone else, they take taxes out of your paycheck right away, and then you use what's left to pay your bills. But if you have your own business, you can manage things differently. You earn money, pay your bills, and then pay taxes on whatever profit is left over after you've paid all your expenses. For instance, if you use your car for work, as a business owner, you can deduct a lot of the cost of running it. Even if an employee uses their car for work too, they can't write off those expenses on their taxes. Business owners often end up paying less in taxes than employees because of these advantages. Good news for those eyeing retirement. If you earn up to about $41,000 a year as a single person, or about $83,000 a year as a married couple filing taxes jointly, you won't owe federal income tax on certain investment profits. This applies to selling stocks or receiving dividends, sparing you extra taxes if you fall within these income brackets. Particularly advantageous for early retirees or those with investment heavy incomes, these taxes are much lower than those on 401k or traditional IRA withdrawals. Prioritizing investments like stocks held for over a year can yield these tax benefits, making it wise to maximize such income streams. Buy, borrow, die is a strategy by many wealthy people to grow their wealth. They start by buying assets like real estate, stocks, or valuable items that increase in value over time. While real estate can generate rental income and stocks pay dividends, much of the profit comes from the increasing value of these assets. But how do they access this growing wealth without selling their assets and facing taxes? Instead of selling, they borrow money against these assets as their value goes up. For example, if someone owns real estate that has greatly increased in value, they can take out a loan against it for spending money. Since taxes are only paid when the asset is sold, this borrowing method is seen as a tax efficient strategy. Additionally, when these assets are passed down to heirs, they inherit them at their current value. This means that if the heirs decide to sell the asset, they only pay taxes on the increase in value from when they received it, not from when it was originally bought. Seeking advice from a certified public accountant or CPA is important for efficient tax planning. While doing taxes online for free may seem tempting, it's worth considering the long term benefits of hiring a CPA. CPAs are highly trained professionals who understand the tax code and can help you make smart financial decisions throughout the year to maximize your tax burden. Even wealthy individuals rely on CPAs for tax planning. By taking the time to understand and plan for taxes with professional help, you can keep more money in your pocket and build wealth more effectively. What other financial strategies are you curious about exploring? Share your thoughts in the comments below. And don't forget to subscribe to WealthWise Insider for more insights on achieving financial prosperity. Until next time, remember smart wealth, wise future.